Hey, this is Kirk with AnEasierWayToTrade. Do me a favor, before you watch this video, please hit the subscribe button so you'll be notified when we come out with more videos. We are live. We are live.
Hey, everybody. Hope everybody's doing great.
We are live.
I'm really excited today, Kirk. This is going to be a lot of fun.
Yes, sir.
I do not see you live. There we go. Boom. Okay.
Live.
Let me go ahead and share. Boom.
Share it. Yes, share. Let's share this out. I am live. I'm going to put my like on here. We're going to have a good time tonight, Mr. Ellis. What do you think? We're going to have a good time tonight.
I'm excited. I'm excited.
What's the topic for this evening, man? I know you got something.
Listen. The topic for this evening, man, is money, how to make it, and how to keep it. Stop playing.
Why wouldn't I should have assumed that. I mean, I should have assumed if I'm talking to you on live on Facebook, it's about money.
That's right. That's right.
We know all about that money stuff. So we're gonna educate the people out here. Hey, if you jumping on, please go ahead and share this live to your Facebook page. Share it. But most importantly, get some pen and paper because we're gonna give you some information tonight that I always like to say. You know, you might not know this information tonight that we're going to bring to you with our special guest speaker. But after this Zoom, Mr. Ellis, what? After this Zoom, they ain't got no excuses.
No excuses. No excuses. You know, I talk to a lot of people, Kirk, about people ask me all the time a whole lot of questions when it comes to taxes. A whole lot of questions when it comes to how we're making money and how we're doing the things that we do, right? And a lot of people that are going to be watching right now just are afraid to ask questions, right? So what we're going to do tonight, guys, is we're going to talk to you guys and answer some of the questions that have been asked from you guys, okay? To show you how, I want to show you how a lot of you guys who are W-2 employees right now are losing tons of money and just don't realize it, guys. I'm gonna put you up on game this evening. All right, I'm gonna put you up on game this evening. We got our special guest speaker is going to be incredible too, and this is something that you want to share, guys, right now, because we're going to tell a lot of people this evening how to put money back in their pockets immediately. Stop playing immediately. So get ready, guys. Share. We are about to have a good conversation with an incredible person. I've known him for several years now. We've done a lot of business together, and we're gonna get the opportunity to get a lot of questions answered, guys. A lot of questions answered. So continue, guys, to share right now. Share. This is something that you actually share, right? Right. This is a blessing that you want to share with other people, because we are going to give you the secret sauce this evening on how to increase your cash flow immediately. Right. Stop playing. How to increase your cash flow immediately, guys. All right. So go ahead, share. I can't see, Kirk. I'm new to this, right? So
right.
I can't see can people comment? How does this?
Yeah, they can comment in the box. I'm putting in the chat box right there. Please share. And they can, if you have questions, y'all, put them in the chat box right here. I can see it. Please share this out. As he said, we get on Facebook all the time. We share all these mimes, momies, whatever y'all call them. We share all that stuff. We share the fights and stuff. We share all the stuff that does not create us income. And you know what? What I have found out, that successful people, rich people, they share information amongst themselves, and it benefits them. But we are, people that are not, successful, I'll say, in the financial, they don't do that. They don't know the right information to ask, or they'll go down and ask bless. I found a lot of people, man, they'll say, well, I heard about this from a CPA, or I heard about this stuff from an IRS agent. But you know what? I talked to my barber and he said it won't work. That's the kind of stuff that we find out, you know.
Right,
you know?
right.
It's kind of scary, you know, that we take that type of information from people that are not qualified. But tonight we got special guests on that's overqualified, you know, to for this information, you know, and so we definitely need to change people's lives with this thing. So again, y'all, share. We're gonna get started here in about 5 minutes. You know, I've learned from people in this industry that, you know, knowledge is power, but applied knowledge is wealth. Right?
Hold on, Kirk. Repeat that one more time. That was something serious right there.
I've always been told that knowledge is power, but applied knowledge is wealth. You know, and you also hear another one, bless you, hear people always say, you know, success leaves clues.
Right.
Well, I mean, I don't, to me, a clue, I got to figure it out. I want successful people to leave me the blueprint. Show me the blueprint. And the guest that we have on tonight is going to show us the blueprint. You know, so I don't want a clue. I want the blueprint. All right, Mr. Grinstead. I'm not the boss of him. Hey, I know your wife is the boss, so that's how it works. But you know, I'm the boss here in my household because my wife told me I could be. You know, she's okay. You know what I'm saying? So, you know, but we got some powerful information, y'all. If you take your pads and paper out, crayons, you know, whatever you got to do, y'all, get people on here because we're about to give you the keys to success right now. Things that can actually literally change. This pandemic, you know, that's one thing I found out. You know, a lot of people were working before the pandemic, but when the pandemic hit, a lot of people left the workforce. And then I've heard people talking about, hey, I'm not going back to the workforce because they found the keys to success online. What's your take on working from home?
I've done it for so long now, and I don't knock any jobs, to be honest with you. Jobs are good to start, but they're just not good to end up long term, forever, right? And sometimes they can be, right, depending upon who you are and what your objective and what your goals are, right? But if you want to create wealth and build wealth, yeah, that's not going to be the place where you do it. You know what I mean? That's a place that'll just keep you existing and living and going on. But actually creating wealth, that's not. It's real. You have to take some of that money and invest it, and have your money work for you versus you working for your money. So it should start one way, end up another way. Make sense?
That's powerful there. That's powerful. Now, with your experience in this realm, you know, because you do own a brick and mortar tax business, you know, and I tell people all the time, you know, that in the tax game, see, I'm not a tax person. I don't know. That's why I keep them on the side. I'm the type of person that people would say, you know, can you build that boat? I'm gonna say yes. Then I'm gonna go find somebody who's qualified to do it.
To build it, right?
I'm gonna get paid. I just want to get paid. I want to be the middleman.
Right.
So that's what I'm doing here. Is that's why I connected with you. You know, because I know you do this stuff for real. You know, so I'll ask you. You know, in building wealth, in doing this type of stuff. You know, why is it, or what is it about, you know, success that scares people? You know, or they feel like it can't happen for them. You know, so they just choose to exist.
You know what it is, Kirk? I'm gonna tell you something I've seen and I've seen firsthand. Right? People don't think it's possible. Right? Everything's some type of trick or some way to you know, take advantage of somebody or something like that. Right? But what we be talking about and what I talk about and what I've been teaching for years is how to actually really grow your money. At the end of the day, right? And there's different levels of income, and a lot of people don't realize that it's true. Like some people make $100,000, $100-something thousand a year, right? So it's difficult for me to talk about $100,000 a month. You see what I'm saying? It expands them. It's beyond their threshold of income, so it can't be possible in a lot of people's minds, right? In reality, you and I both know people that make $1 million a month. Right. Yep. So at the end of the day, once you expand, the goal is to expand people's horizons, financial horizons, right? To exceed that threshold, so where they can say, you know what, I can make $200,000-$300,000, or I can make that same $100,000 in 1 month.
Right.
See? Once they get out of those confines of being trapped within that $100,000 range, now it allows them to be able to grow financially. You get what I'm saying? Right. So it scares people.
You know, like a while back about how you stretch people.
Right, absolutely. That's what I do best is stretch people, right? That's the first thing that we got to do is we got to get them outside of their comfort zone, right? Because that's where wealth is created, outside of that, right? And it's difficult to get people there. Trust me, I come from a very humble situation, right? Very humble beginnings, right? So, and I know people that are still in those type of situations because they don't know better, right? Or their capacity is very low. You get what I'm saying when it comes to finances and money, right?
Absolutely.
So with that being said, I'm not gonna I don't want to prolong this right here, guys, long because we got some an incredible guest that I want to bring on the line, guys. I've known this gentleman for about 7-8 years. We've done business together. We still do business together, and he is an IRS enrolled tax agent, guys. Okay, tax agent. Now, a lot of you guys don't really understand that your biggest bill is not your mortgage payment. Your biggest bill is not your car payment.
Wait a minute, Bless. Hold on for a minute. Because I've had people tell me, is this true or not, man? I've had people tell me their biggest bill is their wife. I've had people tell me that. What do you think?
All right, so I retract what I just said.
Right.
That could be a possibility, right?
It could be.
That could be a possibility. But the reality is, guys, your wife is not even a bigger bill, okay, than your tax bill. But here's what's interesting. Most of you guys have absolutely no idea what your tax bill is anyway, right?
Yep.
You don't even know, okay? So without further ado, guys, I want to go ahead and bring up, like I said, a good friend of mine, Mr. Terrence Hawkins, IRS enrolled agent. Stop playing, right?
Wow, he's in the office. He out there working.
He's in his office. And by the way, guys, I am in the Stop Playing Financial Center right now. Boom. Yep. All right.
And I'm in the part 2 of the financial center, the home office.
Okay, he's in his home office, right? And I'm excited to have you, Terrence Hawkins. Welcome, man.
Man, it is good to be here, man, with you and Kirk. You know, y'all just stop playing everywhere you go.
Everywhere we go, baby.
And I like it, man, because anytime after you're able to talk about finance, when you call me up and say, hey, hey, Terrence, can you add something after what you're telling to your, like to everybody that's actually listening to you, follow you and stuff and trust you as well. Mm-hmm. I want to be on there to actually be a part of what you're doing, man, because I've seen actually how you help people before, how you, still helping people, like now and plan on doing some major things actually helping people, man. So, anytime I'm able to share, man, and share with you and Kirk, I am here.
Man, that's awesome. That's awesome. Listen, really quick, man, and thank you very much, T. Really quickly, I just want people to understand, I do taxes, I own a tax company as well, right? But I want people to understand that there's different levels, right? Okay. To the tax education. And I just want you to explain a little bit about what is the difference and what makes being an IRS enrolled agent a little bit different than just a regular tax person.
No, but that's a great question because a lot of people do not understand the responsibilities of the individual that's actually doing their tax return. And here's the thing, guys. By law, anybody can help you with your tax returns. By law, anybody can help you with the tax return. Your cousin, your sister, your coworker, whoever they don't even know, they can assist you. With your tax returns. And then if they don't do it, of course, you want to go to different levels. Hey, you do it yourself. You do it on some of the softwares and this. And I tell people all day long, guys, that softwares and computers are really stupid because, they basically only thing that they do is kick out what you put in. Mm-hmm. They don't try to check it. They try to do this, kick out what you put in. So if you put something in wrong, junk in is junk out. So do that stuff. And then you're going to have to try to go and actually see some individuals. Here's the thing. When you go and actually have individuals to basically that's going to charge you to do their tax return, that can be a regular tax professional is actually what we say. OK, they supposed to have something called a PTIN number to be able to actually do your taxes and get paid for it and stuff, an electronic file that. All right. Mm-hmm. So they can actually do that because they're doing it for business. They're making money and stuff and they're doing that. Here's the thing about them. They have no type of skin in the game.
Right.
They have no skin in the game. Therefore, when they're doing that return and you sign that return, is all on you. skin and no skin in the game for them is all on you. And then, you know, you have the up on actual level. You have something called a registered tax professional, little skin in the game, no other big type license and stuff, but they go through a little bit, of course, with the Internal Revenue Service, a little suitability check and stuff, little continuing education every year. That's a new program that the IRS actually rolled out, you know what I'm saying, within the last 8-10 years, okay, there. So that's a little bit skin in the game so that IRS can actually say, hey, bad boy, bad girl, you know, you did this thing wrong and stuff like that. But here are the big boys, okay? There are really three designations that can actually represent you before the Internal Revenue Service. That means there's three designations that have all skin in the game. If you have a problem with your return, something going on, they can be there for you. They can basically sign a power of attorney that you don't have to talk to the IRS anymore and stuff and do that. And those are tax attorneys, those are CPAs, which are certified public accountants, and EAs, which are enrolled agents. Now, the major difference between the enrolled agents, such as myself, and those other two, the tax attorney, the CPA, is how we are, licensed to do what we're doing. Okay, how we're licensed to do what we're doing. Like my license actually back there is on that desk. Actually, there's an enrolled agent. I had to go through the Internal Revenue Service. Okay, and I had to take 3 different exams. Each one of those exams is on tax. One is on tax, personal taxes. One is on business taxes, and then one is on representation of tax with the Internal Revenue Service, given by the Internal Revenue Service. Okay, so then once we have those licenses, we are able to represent clients in all 50 states. Attorneys, is licensed for the state that they're in, and they may have a couple of states. CPAs are registered a couple of states as well. They might get some other actually things. But, so 1 or 2 states, they may be able to do taxes in all states, but as far as representing you and do some other things, those states, we are authorized in all 50 states to represent clients, and we have all skin in the game because we also have a 3-year suitability check that we get checked in detail, just like we was getting it for the very first time and stuff. We don't have to take the test again, but we have to make sure our taxes is done, our taxes on time. If we got to do what we preach. In other words, that's the major difference. A lot of people always actually say when you're really looking at taxes and really have a tax issue problem, it's best to seek an enrolled agent first, only because they specialize in taxes and tax only. Mm-hmm. They specialize in other different areas, but we specialize in tax. That's different.
So what you're saying is, if I need a doctor, don't go to a mechanic. I need to go to the brain, the doctor.
Well, you would go to specialists in the doctors is what I'm actually saying. You have a primary doctor, but you don't want your primary doctor to
refers you to a specialist.
You don't want to do heart surgery on you, right? So you can go to a tax professional or somebody else, but if you got tax issues, that's the difference actually right there.
Well, we know a lot of people got tax issues, man. And when they say a tax issue, it's that one of the issues is they're getting a tax refund. I hope you talk a little bit about that tonight, a little bit. That's an issue if you're getting a refund.
That's a little bit
bad issue.
Well, I think that it should happen in levels, right? So let's talk about the importance right now of business ownership and having a home-based business, right? How it benefits W-2 employees, people who have children anywhere between 7 and 17, right? And people who do have businesses versus people who don't have home businesses. I know that's a few things I asked all in one, but if you can, please break that down for the people so they can understand.
That's why I was writing it down.
Bless this one in, right? Write it down so people, talk about it so people can understand why it doesn't feel like their paycheck is enough.
Okay. Right. The main thing there you actually said is one of the number one strategies. If somebody truly wants to reduce their tax liability, or what I always call the tax bill.
Right.
If you always want to reduce some other type of bill that you have, and stuff, you want to actually kind of focus on certain things, right? To reduce the bill. Right. And you got to focus on that. And your bill is your liability with the Internal Revenue Service. So if somebody want to look at that tax return, look at tax liability on that form and stuff, and you actually get that. If you want to reduce that, you have to use strategies. there's no secret any longer that the tax code, if you will, favors business owners.
Right.
The tax code favors business owners.
I hope y'all are writing this stuff down, y'all. Get pen and paper, write this stuff down.
Yeah. So that doesn't actually mean that the tax code doesn't have certain things for everybody. It has certain things, as you said, for a W-2 employee. You know, you're a W-2 employee, of course, and you ask your tax professional, you know, hey, what can I do, and things of that nature. They're going to have a couple of things that we already see a lot. They tell you, you know, get a house, right? They tell you have certain things, and they tell you that because, you know, like contributions because of something called itemized deduction, because you got now notice that word deduction, because the deduction comes off of your income. So you automatically receive a standard deduction based on what your filing status is. If you're single, listen to me, your standard is $12,400. If you're married, you know, it is $24,800, you know, that you automatically getting. That's the standard deduction that comes off of your income. You may have heard, you know, when the whole change in 2017, former national President Trump was actually talking about your first $12,400 is going to be tax free. That means zero. That's what he was talking about the standard deduction. Okay? There, so you automatically get that. So when you automatically get that as a W-2 employee, tax professionals like, well, you need to itemize because it's either standard or itemization, whichever one helps you the most.
Right.
But what has happened, Bless, is most people do not have enough in itemization, which means your interest on your home, your contributions, your personal taxes for real estate taxes and things of that nature, your medical expenses. You know, they took away unreimbursed expense that you used to actually get, 2106 form. That's totally actually gone now. So in other words, you don't get those things you had before. So all you left with, which is the standard. Okay. All right. So then they actually say you can do something like get a tax deferred, you know, plan like an IRA or 401k, you know. Yes, it helps. But here's the thing. Stop doing things just to pacify you a little bit for a little bit thing. Okay. You know, yes, you can use those things. Anything helps. Don't get me wrong. If you can save $50, save $50. You can save $100, save $100. But here's what we want to make sure. If you're seeing people saving millions of dollars and you're only saving hundreds of dollars, we need to be in position to do what the millions of dollar savers are doing.
Correct.
That means you have to really understand that I need to position myself with the business. Publication 535 in the Internal Revenue Act code kind of goes over expenses with a home business that you can actually take and turn some of those exact same things that I just said into business deductions. So now what you wasn't able to use before, you're able to use now.
That's right.
And that's the whole thing about the power of a strategy of a home. Then you got to have the intent to generate a profit. So you're trying to make money, but the goal is to make as much of that money to become tax-free. That means it's simple. I'm able to now write off stuff that I wasn't able to do before. If you're a W-2 employee, you got about 10, maybe 13 legitimate tax deduction if you even qualify for that. Yeah.
Wow, guys. I hope y'all understand what Terrence Hawkins just said. All right. Hope you understand. So let me share something with you guys. The difference. He said 10 to 13, right? That's if you qualify to write off to reduce your taxable amount, right? Watch this, guys. When you start a home-based business, the game changes. And Terrence Hawkins, please tell the people what actually happens in that game change.
Okay. What happens is this. Now you are open yourself up to use a whole new section of the tax code. I mentioned publication 535. Now that opens up to you. Now, instead of you're being captured, I would call it, you know, into one thing that you can take it or not take it. Prime example, a lot of people actually blessed last year are working from home, right? Yeah, working from home, whether it's their choice or not, they're working from home. They're using their computers. They're using the internet. They're using the electricity. They're using all of those things working from home. Okay. No problem as far as doing that. And they're asked, since I'm working from home, You know, I know my job ain't using their power and I'm using my power. Can I have a deduction some kind of way on there?
Right.
That was the unreimbursed business expense that people use. Some people have to use their cell phones more because they're working from home.
Yep.
Right?
Yep.
They're doing all of those things and working from home and stuff. So they got all the expense that they're using. They was already paying for it. Now they're using it to make their W-2 income. That's no write-off for you because you're in W-2. No write-off. Now, when you have a home-based business, whole new world opens up. Because the whole new world says that now you're using your cell phone, your electricity, and your internet, and all of those things for your business. And Publication 535 says if you're using expenses that are ordinary and necessary to the business that you have, ordinary necessary. If they're ordinary necessary to the business that you have, you can write those things off as business deductions and reduce that. That simple thing right there can help individuals, even in their home, take those expenses. It doesn't matter, bless, if you're renting or you have a mortgage. A percentage of that can potentially be a write-off. If you have trash collection, I teach people how to take your trash collection. If you're paying for somebody to come through your neighborhood and stuff, pick up the trash and throw it away, it can be a write-off. If you have your alarm system, that can now turn to a write-off. Here's a big one. HOA, Homeowners Association. People know that you can't write off homeowners association with just a W-2.
Correct.
You know, you can do it if you had a rental property and doing renting, but yourself as a homeowner association, you can't write it off. But you can have write off a percentage of it if you have home-based business.
Home business. Yep.
It's just you open yourself up. You have hundreds of deductions with a home-based business. 10 to 13 probably with not having a home-based business. Now, that there alone, 10 to 13, hundreds. Position yourself. I mean, I just get dumbfounded. I'm like, just position yourself to be able to do it. And I've been teaching that, blessed, for years. We've been in the tax industry, as you know, I mean, forever. I mean, I've started doing tax. My dad taught me when I was 15 years of age. I'm 50 years of age, you know, now. My wife and I, you know, here I founded Hawkins Accounting and Tax Service 25 years ago. We celebrate 25 years this year. You know, so going for that. Yeah. So, and my dad actually told me after way back then that the best deduction, if you want to, he told me that you're going to want to help your client save money, always tell them to get a business.
Yep.
What you're saying. Every millionaire. Okay. What other millionaire you have seen said, I made millions of dollars, billions of dollars, and paid nothing in taxes?
That's crazy. We get mad at that. We get mad at that.
If you make $1 million in W-2, you getting killed. You don't want to. I don't know what. If you don't have anything else, you get killed with taxes.
Can I show this really quick while you talking? I'm just gonna show that while you talking.
Yeah, nice book. You know, in there, you got to qualify for it. So you don't want to get killed with a lot of actually different things as far as doing it. But so you want to have a business, and those are clues. You know, y'all mentioned clues are. You know, there's a clue. Those are nothing but clues on what you should be doing.
Correct. So here's something I want to do, right? Because I want to go a little bit deeper than we normally do, or we would normally do, right? Because I want people, because there are some people that are on, when it comes to finance and taxes, right? They're on like the lowest level. They're like in kindergarten, all right, of taxes, right? So let's go ahead really quickly and let's break down somebody, okay? You might get a pen, T, right? So let's break down somebody that makes $80,000 a year. Okay. They have 2 children between the age 7 and 17. Okay. And now they have decided to start a home-based business. Okay. I want you to show with just general basic numbers for the basic amounts, right? The basic amounts that people use, right? With basic numbers, show people exactly the difference between when they own a home-based business numbers versus owning the home-based business.
Are they single or married?
Okay, sorry. Yes, they are married.
Man, married making 80.
Married. Oh, I'm sorry. That's one person, right? Stop playing. Well, some people are married making 80.
I hope so.
But there are some people out there that are married combined make 40 and 40.
That's true.
You know what I mean? 80 grand. So for let's make it, because I'm gonna keep it Let's make it 100,000.
Okay. All right. I'm gonna change my number here. All right.
Okay,
100.
let's make it 100,000.
Married couple, 2 kids.
Married couple, 2 kids, 2 W-2 employees.
Okay.
Right? Maybe some type of professional, some young professionals, right?
Okay.
Each making about $50,000 a year. All right. So for a total amount of $100, I mean, for $1,000, sorry. I mean, $100,000.
Gotcha.
Right. And they now own and started and partnered up, let's say with us, with our home-based business situation,
Okay.
right? And they are making 100,000. I mean, and they've starting to apply some of these tax benefits.
Okay.
All right.
Okay.
So, and let's throw out some numbers so people can understand. Now, guys, I just want you to see the audience that's watching this, right? Put yourself in this situation, okay? Whether you are, if you're married and you're a couple, have both of your salaries there. If you have children between the age of 7 and 17, add that as well, right? What Terrence is about to do is break down some numbers that is going to blow you away. This is why it doesn't seem like your check never seems to be enough, right? And he's going to break down why it appears that way versus when you own a home-based business.
Okay, the first thing I'm about to do and stuff, I got a little column here and stuff. I got with and without. Okay, with and without. I mean, you said I got my pen, man. This is how I do stuff, right?
Okay.
I do stuff. I ain't know what you was going to say what the numbers is. I mean, it's doing something. So here's
come out of anything.
yeah. The first thing that you need to know, okay, is I mentioned something called standard deduction. So I'm gonna do that where everybody get that's $24,800. Why? Because your first $24,800 on the married couple is tax free. We got to start thinking about what's tax free. So the first $24,800 of your income as a married couple, when you put that income together, is tax free. So the first thing that I did on both sides, because regardless you got a business or not, on both sides, I put $100,000 minus your standard deduction. I got right here. Okay, this. Let's say you have nothing else, is what we're saying. You have nothing else but that right there. That will become your taxable income. Write that down. Taxable income, because that's what we attack. Because on your taxable income, that's the number that basically you got to look in something called a tax table. So your computers are doing all this calculation, okay, that you don't really see, right? That's there. See, I'm glad that I learned when I was 15 years old, because my dad used to take us to the library to get all the forms, blessing, and the books and everything. And all the things. We had to do everything by hand. This right here. That's exactly what I just said.
Yep.
Still on there. 75. See, calculating the pen and the pad. That's all we had. You know what I'm saying? Doing just to get the real numbers. So we used to look at that taxable income, going to the chart that the IRS have, and it's going to say based on this married couple at this adjusted, at this taxable income, this how much they're supposed to pay in tax. Now, well, what you just said then is the deduction stop. Notice how a deduction goes against the income.
That's right.
Deduction goes against the income, right? So if you are just without a home-based business or any business and stuff like that, your taxable income in this example is $75,200 to $100,000. Then you got to look into the tax tables and see how much that you owe and this and that. I'm going to be, I'm going to do federal and state and stuff like that. So I'm just going to do 18%, okay, at that level, okay? I'm going to do 18%. That means 18% of your monies is going towards tax. I'm being extremely conservative right now. Extreme. Because I'm not talking about Social Security and Medicare.
Right.
Okay? I'm not talking about those things. That's another, thing after we can ask you later. But of that, that's $13,536. So 18% of 75 is $13,536. In that example, that is how much you're going to be owing in taxes. That seems a little bit high, but you got 20% of that. Yeah, that's right. I'm doing federal and state. That's right. Okay, federal and state. I was out doing my head. It's like, wait a minute.
Right.
The federal and state I'm doing. All right, cool. So this 13,536. Okay. We're doing roundabout numbers because I'm doing this off the cuff, guys. Okay, so some of the ones on social media I know are nerds. Like, oh no, it's exactly. Y'all got a computer software. I can do that too. I'm just doing a roundabout. All right. So if you're at $13,500, that means that's your tax bill that I'm talking about. That's your liability. Now, You pay that liability normally as a W-2. Money's coming out of your paycheck, coming out your spouse's paycheck, and start paying that. Now you got 2 kids in between 7 and 17, right? So you're gonna get $2,000 per child. So you're gonna get a $4,000 credit. A credit is just like money coming out of your check to pay the IRS. Okay, just like actually doing it. So you got that 4,000 credit there. That brings that down to 9,536. So what you supposed to have coming out of your job in this example for federal and state is $9,536 in taxes that you're going to be paying yourself. Okay, now let's compare that, Bless.
Mm-hmm.
So now we got 75,200. Now let's talk about some deductions that you can have when you have a business. Well, let's start with your 2 kids. Start there with 2 kids, because what we teach, the first thing we teach is you must hire your kids. Easy process is done. That's what we actually teach when people actually join in actually with us and stuff in the membership that we have. We teach them, we educate them stuff about how to do it the right way and make sure they're doing it. You can basically hire your kids. You pay your kids. Your kids doesn't have to pay federal, state, Social Security, Medicare if they make lower than the standard deduction. For them, then it's $12,400. And guys, it's the same amount of money. If you're going to pay, on your listeners, I'm sure you got your kids in some activities. You may have them in cheerleading, volleyball, basketball, football, scouts, whatever it is, you got them in some kind of thing, right? That's doing, and you spending money in. We say pay your kids and let your kids pay for all of that stuff. It's the same amount of money. We'll teach you all of that. But for this example, let's say we are doing $6,000 per child. That's it. That's $6,000 per child. So you look at that, that's already $12,000 right there total. That comes off of that income. So now, as we're at 63,200,
right?
12,000 comes off of that. That's just it. Then, Bless, we said, whoa, well, you got a business. I'm sure you're using that business to travel around to get supplies. You're going different places and meeting people, meeting customers, doing this. We teach how you can actually get 65 to 75% of your normal miles into a deduction as a write-off, right?
That's right.
Turn that personal miles into business miles.
Into business miles, right.
So I'm just going to take 70%. Most people on average are going to drive about 13,000 miles a year. Okay. So let's say 70% of that, that's 9,100 business miles. The IRS is giving us 58 cents per mile. That's another $5,278 in the deduction. Let's take that off of our income. So all we're doing, guys, is finding the what? Deductions. Okay. So when you take that off of that 63,200, we're now down less than 57,922. Things are going down lower, isn't it?
Right.
Things are going down lower. Now what happens then? What happens then is we got more things, because those are just 2 things. All I used was kids and I used miles. That's all I did so far. Let's go on vacation, because you got the kids. They've been to school all year. They had COVID. They mad. They want to go out somewhere, right? So they want to do all that. So now let's talk about going on vacation. A family of 4 going on vacation. Can I say $3,500, $4,000 for a vacation? Yeah, I'm going to go on 1, because you ain't got no money going to. You're going on 1, right? So yes, use $4,000. So what we teach people is how to not go on vacation, but take business trips and turn those into business day. The IRS basically said in Publication 535, you got to do stuff into business days. You turn something to business days, you can write it off. You're going to teach that. So let's say that's another $4,000 in a deduction. So we know now deduction comes off of the income, right? We're down, Bless, to 53,922. The other person was up at 75 right there.
Yep.
That didn't have a business. You got a business and you're already down here, 53. And all I did was 3 deductions so far. I'm just going to stop there with the 3 deductions. I ain't even going to go crazy with it, right? So we was using 18% in the tax bracket, right? Even though 53 is a lower tax bracket than 75.
Correct.
I'm going to still use the 18.
You're going to still use the 18?
Still use the 18. I'm still using it. So 53,922 times 18%, okay? That is $9,705. Now, that's $9,705. That's your new tax liability.
Boom.
That's your tax liability. Before, your tax liability was $13,536. 13,536 minus that 9,705 is going to be our difference in savings. 6 minus our 9,705. That's $3,831. That's $3,831 in tax savings because this person had a business and the other person did. That's per year. Divide that thing by 12. I like to talk in months. Divide that by 12. Regular math. That's over $319 a month. $319 a month in tax savings. And all I used was 1, 2, 3 tax deductions from that example.
And how many, Kirk, how many tax deductions are there? Pull up that book. Pull up that book. Boom. And he just now, guys, he only showed you 3 of them.
Yeah. That's the concept that people don't realize. You are going to basically spend money on your kids anyway. You're going to drive your vehicle anyway. You're going on vacation anyway. How about having a write-off? And then there's tons of other stuff you can do because of the book and stuff, the deductions than that. So when I look at, most people need in between $500 to $800 a month in additional cash flow, right?
That is correct.
They actually need that. If we had that, most people would have stopped foreclosure, bankruptcy, repossessions, all that would have stopped if you had that, right? That's just real numbers. When we're talking about $320 right here, right, for just these deductions, the best way to increase your cash flow is to pay less in taxes. Because everybody always say this. Nobody argue this. The best way to increase your cash flow, they say, is to reduce your expenses. Mm-hmm. But they work on the wrong expenses first. You got to work on the biggest expense.
The biggest one first. Right.
Yeah. I'm going to refinance my house. Nothing wrong with refinancing your house. I'm going to actually stop eating out. Okay. If that's what you want to do, right? I'm going to carry my lunch to work now. I'm going to do, this. I'm about less stuff. I'm not going to go on my vacation now. What they were doing, they working on the wrong expenses first. People will go crazy about changing their cell phone carrier just to save $10.
Right.
Instead of worrying about, and I like to show people the percentage here. And the reason I like to show the percentage here, guys, is because when I'm looking at this, I'm like, showing the percentage shows people 18%. And you're taking, because what you're doing is all of this money in between, that 75, 200, and down here with that 53, you're made all of the other money, what's called here, that 12,000, the 5278, right? The 4,000. You're made that to be tax-free. So you took something from 18% down to 0%. That's true income shifting per IRS. That's what that's called. That's what it's called all day long.
Listen, I don't know about you, T, but I'd rather spend $9,000 in taxes versus $13,000 in taxes. Stop playing, right? Exactly. I'd like to keep more of the money that I'm making, right? Versus continuing to give it out.
Exactly.
Right?
Exactly.
Listen, here's what I find out, and you mentioned this the other day when you came out to our facility, right? And I thought this was very important and it was impactful. Most people will go to a store, like, let's say if they're in a line and they go to McDonald's and they buy a Happy Meal for $5.99, right? Okay. Then they leave and find out they could be 2 miles, 5 miles away. As soon as they find out that they were overcharged and they look at their receipt and it's $10.99, to all of my watchers out there, what are most of you guys going to do when you see that your receipt and you have been overcharged for your Happy Meal?
Listen, I had my brother now, he told me a couple of months back, he stayed on the line with AT&T's customer service for 2 hours because they overcharged this bill by 33 cents.
See?
I'm like, 33 cents. He stayed online for 2 hours for 33 cents. I got disgusted with him.
Right. So what I'm saying is, people are willing to do that when the same thing is actually happening to you right now, but on a larger scale. You're losing way more money, right? And we notice that a lot of people are not susceptible to receive the fact, or they're reluctant to take advantage of getting their own money back.
That's right. And I say that because I mean, see how messed up that we are at this thing. Number one, we're not doing what millionaires and stuff do by having a business. So we are not taking advantage of tax deductions to help us. So we are paying more than what we should. Our bill is just higher. It's kind of like you go and stuff to let's say a restaurant. Okay, you go in there, and you paying a bill. Okay, but somebody else come, they always got a coupon. You can have a coupon to use to pay less, but you never use the coupon. It's on your phone, it's on the thing, but you never use it, right? Because you know that's a skill. But once you find out how to use it, you're gonna always have that coupon, right?
Right.
So what we just showed you in the home business is how to always have a coupon for your tax, okay, or reduce it. Now, here's the thing: even if you have a coupon for the tax, which is a home business, and we only had $9,705, here's the key. What you said, you're not going to overpay on the food that you buy regardless still. So if you're not going to overpay on the stuff that you buy, still, why would you overpay with the Internal Revenue Service? So we have to tell people, it kills me to actually see people overpay for anything. You do a great job in reducing and you got it there, and you overpay. Now, for some listeners, like, now, what do you mean to overpay? I don't want to pay any stuff. I do the stuff, write my check. It's saying, no. From your tax liability, okay? That's actually right there. Overpaying, guys, to the Internal Revenue Service, and it's on your tax return, is called a refund. Because when you overpay at that McDonald's, holding up the drive-through line all for that doggone food that you paid an $1 for.
Right.
You say, oh, wait a minute, stuff. I thought the Coke was $1. Stuff like that. You're right. Yeah, but you got to get the fries. Well, I mean, you're going crazy over these small. We're focusing on the wrong things. So when we're focusing on those things and you want to save that dollar there, right? You're holding up because you tell them, hey, you better refund me, right? My money. And doing that. Now, it kills me that the IRS said in 2019 that 70% of the people, so when people say, not me, 70% of y'all, all right, that did this, 70% had a refund of over $2,700. I think it was $2,717. Over 70% had that. That means 70% of people have been overpaying. Now, remember I said that 9705 is what comes out of your paycheck, because what happens is this, guys, your employer takes money out of your paycheck and send to the government authorities on your behalf. That's your federal withholdings. Okay, you tell them with a W-4 how much to do. That's what you instruct them. So you got the control. You use your W-4, how you fill out. The W-4 is designed for you to break even. If you read the instructions, y'all don't want to read the instructions. Read the instructions. It tells you it doesn't want you to pay too much, and it doesn't want you to pay too little. Okay? And in fact, if you pay too little, they're going to hit you with an underestimated payment. If you pay too much, they're just going to give you what they call a refund, your overpayment. And you got 3 years to claim it. Okay? So the goal is to even out. But 70% of people got that filled out wrong, bless. They just overpaying an average. Now look at that for a second. If somebody was overpaying this, $2,700 for the whole year because you get a refund. If you divide that by 12, that's over $200 a month. Kirk just mentioned that his friend was actually mad off something less than $1, holding that he was getting charged per month. And a lot of people like that. You let the power bill charge them more than $10. You let the cell phone bill add taxes to that thing and charge them $8 more that month. And they know about it. They're going to call and go crazy as far as doing it. But you're going to overpay the Internal Revenue Service $200 and not say nothing.
Nothing.
And be excited that next year when you get something called a refund, because we've been conditioned to think that way. Come on now.
And then watch this, T. And then when they get their refund, a lot of people, they pay back bills.
That's right. How many times have you ever heard people stuff in your tax practice? I know in mine that basically actually said that I need my refund because I need to catch up on bills.
Is that backwards?
That's not, because you might have had the money during the tax season not to even get behind on the bills.
Exactly. And watch this. The bill wouldn't have been what it actually turned out to be, because a lot of times there are late fees added on top of the fact that you were late. So an extra $35 every time, right? So now your income tax, what you call income tax money, which is the amount of money you overpaid, is paying fees on top of everything else that you have. Stop playing.
That's right.
So guys, you're throwing money in what they call the garbage.
Throwing the money exactly in the garbage in the way. That's why I focus. And a lot of people actually say, Terrence, why are you so passionate about tax? Why you want to do this? Because I know 7 to 8% of the people are living paycheck to paycheck. And I know that people need to work on their expenses, but the best expense, the number one expense that you need to work on is tax. Just so happens I'm in the tax industry. Yes, I'm passionate about it because I am, and I like it. Yeah, I want those crazy people that like tax. Yeah, I like it, but I'm telling people you have to focus there. Millionaires, before they make decisions on purchasing things or starting a new business or what area, what city they come into, they look at the tax implications. That's what they look at. When you see a big corporation, Amazon or somebody coming to your area, or Walmart coming to the area, I guarantee you they're going to be talking to the city about what kind of tax breaks they're going to get.
Boom. That's right.
It's all about taxes, guys. And doing that, when you're seeing Congress fighting back and forth, you think, oh, they fighting for me. No, they fighting for their paychecks. It's about taxes. It's all about taxes, guys. Okay, so they try to minimize. I mean, America was started people coming over here because of taxes. It's about taxes, right? So it's all about something that we have to start focusing on. And I'm gonna tell you, we don't study taxes. We're not taught taxes in school. We're not even if we're talking accounting. I don't even know if I got my book in here. No, I don't have that one from UNC Charlotte. I went to University of North Carolina in Charlotte, right? And I'm kind of hot actually with this one. So, excuse me. I don't know if Dean going to actually see this because I still sit on the Bell College Business Council. I still sit on that one and everything. So, but if Dean's actually listened to it, we got to talk. And I want to get this in here because yes, I got my accounting degree from the University of North Carolina in Charlotte as well. And I was going through things. And do you know, after going through the accounting, doing all this kind of stuff, right? Going through grade school first, college second, and going through that, we had one course on taxes the last semester of the school. And my son's going through the same thing right now because he's at UNC Charlotte going through. And guess what? One course on taxation. One course.
That's crazy. That's crazy.
All part of that front book is about your personal tax.
But you know what?
It's about corporate tax on counting somebody else's money for the corporations.
Right. Yep.
Right.
You know what, Terrence? I firmly believe
all those years, you got a little piece about educating you on your own taxes, but that's going to be our biggest expense throughout our lives.
I firmly believe that the government don't want you to know this stuff, though. I mean, most people don't. They don't want you to know how to take advantage of these laws. Most people,
the government ain't teach you. The school don't teach you. Yeah. And just like I said, the government don't. Oh, the government no, because they taking the tax breaks. They fighting about taxes right now. They know.
They know.
Okay, they know. But it's the people that is not taught and going down. As far as doing it, it's not taught. So here's the thing: we have to start teaching our kids.
Absolutely.
We have to start doing the things of what we're doing right now to explain to people. That's why more people need to share, because we have to start taking that type of responsibility on our own because we are paying that every day, right? Not just sales tax, not just property tax. I mean, even when you die, you got a state tax.
We perish for lack of knowledge, brother.
Yeah. And then we retire. Y'all see how passionate I get with it. Then we retire and still pay taxes.
Yep.
When we got books, your retirement needs to be tax-free, guys. If you're not getting free retirement, You are planning everything wrong right now.
Well,
Most financial planners focus on accumulation. Accumulation, right?
Yep.
Always, oh yeah, you get this. The average of X amount of years, you're gonna get 8%. You're gonna get 10%. The average of this, you're gonna get this. Some of them don't talk about the losses. Number one, which is messed up. They don't talk about the losses.
Right.
Which the average, it don't even cost to you stuff like that. So the numbers is all wrong in doing it. But they never put in the tax implication of doing it. You better start saving taxes. Is what I call. I like candy, bless. So you're gonna love this, right? I like candy. I always say, you better start saving taxes now and later. Now and later is always sweet, right?
Right.
Terrence,
Always sweet.
I got people telling me, Terrence, all the time, and I know you know about this stuff. What you talk about tax-free retirement. Well, I have people tell me all the time, well, I got a 401k, and that's gonna be it for me. What do you think?
Yeah, you're right. That's gonna be it. That's gonna be exactly what's gonna have you getting a part-time job. You're right. See here's why.
break it down, T. Break it down.
Break it down for you. 401k, number one, was never meant for retirement. It's a glorified savings plan that really helped corporations try to get a tax deduction themselves. Well, tax came in again, right?
Wow.
It's gonna help them, because it's almost like, hey, corporations, you don't have a pension anymore, so you don't have to pay people for the rest of their life, right? In doing it. So we're going to, vote that you don't have to give people those anymore. Okay, that's going down. But the corporation's like, okay, but we need some kind of benefit, some kind of incentive to get people out working. Oh, let's come up with this thing called a 401k. Guess what? You can have a benefit for doing this and offering this, and they kind of monitor that thing as far as doing it. Now, here's the thing actually with the 401k. Number one, you have to have cash flow to put into it. 7 to 8% of people don't, because 78% of people leave paycheck to paycheck. Bottom line. It all goes back to it, guys. In the bottom line, they don't have that as far as doing it. But the ones that do have something to put in, number one, they limit to you. Okay. But then they hope with you and stuff and say, hey, we're going to match you up. The jobs that do get matches, we're going to match you up to a certain percent.
Yep.
Okay. But here's what the 401k do not share with you. When your financial plan is going to 401k and they're telling you, and guys, I used to teach this for a long time and I was doing it wrong myself. Okay, honestly, I was doing myself. I was actually teaching people, say, hey, well, yeah, get your 401k and put in what the company match, and only what the company match, then take the rest of it and invest. Sounds good. People know that. Still, until I start incorporating the losses of a 401k and stop just the average stuff. And when I start doing that and doing that and doing that, I start realizing, like, whoa. On the front end, that's not even good for accumulation even of your money. Okay. Now that's another story. I can prove that to people. But then, so let's say that the accumulation is even right. When you get to accumulation and stuff, and you're like even, well, you don't incorporate the tax hit. So you get a tax deferred rate now.
Right.
I want everybody to understand something. We are at, I don't care who you voted for, we are at the lowest tax rate it's ever been now. I knew that was going to happen because I knew who was going to be president that time. Come on. The one that made billions of dollars and paid $750. That's who.
Yeah.
So you think he's going to pay more or less? No, he's going to fix it so it's less. And that bill that he did, a lot that he did, goes out in 2025, regardless of who in office. So it's going back up. This is the first time that we know taxes is going up. But here's what people are doing. People are now, if you had a chance, you basically pay 10% now, to save 10% now, or save 20% later. Don't we want to save that 20%? We want to save that 20%. Okay. But if you are deferring all of your tax things to later, what are you doing is saying, I want the tax break now. I get taxed on it later. I'm okay with getting taxed on it later.
It's going to be huge.
That's what you're saying. So you're basically telling them you're okay with being taxed at the higher rate. Let me get my break at the lower rate. Go ahead and tax me at the higher rate later. We know it's going up. It's at the lowest it's ever been right now. That's already crazy. As it
we
is.
don't know.
Okay?
We don't know this. We don't know the information though.
I mean, the people that hear me know now.
That's right.
What we said at the beginning of this thing, Bless. We said
That's right.
you may not know it at the beginning, but you can't leave here not knowing it. Hey, Mr. Hawkins, I got somebody just hit me up. Just hit me up and said he's listening to you right now. I need assistance with my 2019 tax because I have been audited. So I need some help. What would you advise them?
Stop using the other person that you used before.
Right.
And give us a phone call. Because we don't know actually what's going on. You know, we don't know what's going on. And that's another thing. You know, one of the best ways, my wife actually said this today, like somebody, and I almost died. I was like, oh my God, I thought that you was going to say something, this, something, that. And, it was like, what can, they had, filed taxes late and did some stuff, got all of those penalties and everything was on it, right? And stuff. And it was like, what can I do with this? My wife was like, stop filing late.
Yep. Simple answers, right?
Because it was like, stop filing late. You save more money because you got to worry about the penalties. Because we have audacity to mess up all of this stuff we're talking about and then file late. And now we actually paying penalties and interest on top of that.
We kind of backwards.
We can help you with some penalties. Yes, we have helped people to reduce penalties. We'll help people to settle with the IRS. We'll help people that made over that owed over $170,000 to only pay $1,100. Okay, and settle with the IRS. That's what we do as enrolled agents. I do it all day long. Just help another person that owes $60,000. They settle for $4,000 or something. We do it all day long. Like eyes closed doing this and that and stuff like that, and helping people actually doing that. But the key is, like on the Fresh Starts Initiative, is getting there first. But we focus on not just getting there. And yes, praise God for the help, the Fresh Start Initiative, and all that. But going forward, we don't want you losing money.
Right.
Absolutely.
Money. Yeah. So that's why we do a lot of the things actually that we do. Honestly, so people can stop losing money. The listeners got any questions at all, Kirk?
I know they all agreeing with everything you're saying, talking about this great information and everything. I put in there. If you have questions, John, and you're watching this on the live, if you're watching this live right now, put a 1 in the chat box. But if you have and if you catch the replay on this, make sure you put a 2 in the chat box. If you have any questions that you want answered right now, listen, we got the man, the myth, the legend on right now. We got Batman and Robin. I call Mr. Hawkins Batman and Bless and Robin. We got Batman and Robin on right now. Don't go out of here right now and then go say, well, it sounds good, but I don't know if he's right or not. So I'm going to go ask my uncle who's a barber. Don't do that. Don't ask your barber about tax stuff when you got the man, Mr. Terrence Hawkins on right now of Hawkins Accounting and Taxes right out of the Queen City, 25 years of service. Hey, you got to get the information from there. So anybody got questions, go ahead and put them in the chat box and we can get to them right now. Hello, Mr. Trevor Hawkins. How are you today? Florida. Okay, Quintella.
Hawkins, you got an awesome last name. That's all I know.
Okay, so T.
Yeah.
I think it's important right now for a lot of people want to probably know what is a good home-based business, right?
Oh, that's a good question.
Good, right? A lot of people want to know that, and a lot of people ask me that, right? And that's when I share what we do. As far as our home-based business and how incredible it is, and how not only we do all of these things, and they'll learn how to do all of these reductions and all of these things like that, deductions, right? But they will also create another stream of income. Watch this, that can potentially cover all of their taxes. So now, whatever you make at your job, you're keeping 100% of it. Stop playing. So could you just talk a little bit about making wealth real, all right? And how we came to this and how it's going to be good for anybody that partners up with us and when it comes to making money on a separate stream of income.
Okay. And it starts, guys, with, I used to teach this all through the country, city, state to state and stuff, exactly what we're going over now. Have my pen, have my pad, I'm writing all on boards and doing everything, answering all those questions. Mm-hmm. And at the end, individuals to always ask me, so what business should I get? What's the structure? What's the this? What's the that? And everything. So, and in doing that, I had to start looking because I always look for things for my clients, start there. Like I used to say, hey, get tax deductions, and they was like, why you do? Hey, get a house. So I got my real estate license because they ain't have that, stuff like that. So in looking at a home-based business, I looked at a couple of different things. Number one, people are busy. Okay, they're busy doing stuff. They're working 40 hours, 50 hours, 60 hours a week, some of them, stuff, and they got kids and they're doing this and stuff like that. So, they really, it's like they really don't have a lot of time. And I'm seeing people that when they was living paycheck to paycheck, they're going to get these part-time jobs. Now, to think of that for a second, they get W-2 paying a lot of money on the main job, and then their solution that they thought was to get more money was to get another
job, right? Right. Right.
No savings at all as far as actually doing it.
Right.
So I wanted them to actually get a business number one for that, so we can take advantage of some of this stuff. One of the first things actually that I looked at was cost. Okay. The time and the cost. What did they have to do? Okay, and the cost of it. MWR I like because they already got experts that do everything, and all you do is refer services. Is you refer people to them. Their experts do everything else. So they are basically, again, paying you, just like the tax world, paying you for stuff you're going to do anyway. And that's kind of what I was like, okay, wait a minute. If I'm going to be at a restaurant and I basically eat that restaurant and it had the best macaroni and cheese that I like my God, you need to go there. Why? Because they got the macaroni and cheese.
Yep.
You need to go. Oh, you look. How many people ever actually refer somebody to like a seafood place? Say, now, anybody here got a good seafood? Because it's big right around North Carolina. You're like, who got good seafood? We got crab. Who got a broil? Who got this and that? Right? Eat that on there. Oh man, go to a new restaurant pop up. Oh my God, hey, you got to go here. You are referring people, okay, to them. Now, just think about it. They don't pay you for referral. They don't give you anything for referral, right? What MWR said is, you refer individuals to us. Just tell people about it. They got good service that does tax, that does credit, that does debt, that does retirement planning, that does real estate, getting you to a home, anything financial. And we know that 78% of the people are paycheck to paycheck. They work on cash flow. Great service, right? And you say, hey, you can refer them. So I started thinking about, whole thing that guy was like, well, do they have to get licensed of it? Because they hold people up. Some people ain't got time to get licensed. You don't need no license. You're referring people. They get a membership. MWR take over. And they do everything else. And you get paid. And that makes it to qualify for a home-based business. That means people don't have to know how to do tax, know how to do credit, know how to do all those other things. Just like if you refer somebody to the best steak place, you don't have to know how they cook it. Okay? You don't even have to know how they actually cook it and stuff like that. All you got to do, you just refer. Same kind of thing. You just refer people. You refer people, they do the work, you get paid. I, as a team, build a team actually with them. We're going, even though they got services and enrolled agents and EAs that'll help you on the tax and all that kind of stuff, I make sure that our team is doing this.
Stop playing.
I'm making sure our team is doing this and doing it the actual right way. And so then when I saw that I can easily save somebody more than what the membership costs. That was another reason. Okay. So they got good stuff. All we got to do is refer. I can save them so their membership to how all businesses cost money. But some of the people say, I want to pay. You ain't really talking about no business, because I'm sitting here in the office that we pay monthly actually. All businesses cost money. Okay. You're doing something. So when I looked at, hey, wait a minute, I can save more in the taxes than the business costs. That means, but I'm telling my tax clients then, that means it's not costing you anything and you're getting these benefits. So net wise, your cash flow go up. Woo. Okay. Cash flow go up.
Woo.
Okay. All right. Because it's a home-based business. Okay.
You got a question in the chat box for you. What do you do? It says, how do you do when filing taxes with an LLC that you have never used?
That ain't got nothing to do right there, Kirk, with FWR. You got me all by going to tell the boy, you just Let me finish this first. We're going to do our questions. Okay?
All right. Okay.
But they're going to be like laughing at us. Guys, this is a prop too. We just having fun. Okay. We talking money, right? Right. And we close, so we be hitting each other all the time. Bam, bam, right? So this thing, all right? And I'm going to get to that question, right? So here's the thing, guys. is so because I really actually want them to understand actually why, as Dr. Bless said, that I chose this company. Two, in a business, I knew that the market needed it.
Mm-hmm.
Okay. We talk about 7 to 8% of the people are basically paycheck to paycheck. Then 70% of the people overpay on their taxes, one service that they help with. Okay. 80% of the people have credit challenges, another service that they help with. Remember, they do all the work. They do the letters and everything they help with. Okay. 90% of the people are buried in debt. They help with that. And check this stat out. 70% of the people have less than $5,000 saved at age 65. They help with that. I started thinking, because in business world, I'm like, is that a market for that? Okay. How many people want to save on their taxes? Everybody know. Okay. They have like 4 or 5 separate companies that you can make a lot of money off separately. There are people that have credit restoration businesses, right? Themselves, and making a lot of money with it.
Mm-hmm.
This is that and more. And the cost that they have is less. They have a product in there of their credit product in there. Their membership, so people that actually know, is only $80 a month. And that includes spouses. So 2 people, $80. Okay. I like everybody can do that. Because I'm looking at some companies that have credit and they paying hundreds of dollars, like $100 per person.
Mm-hmm.
You talk about 2 people, that's $79.97. And you get the tax, the enrolled agents, the this, and you see what I'm saying? You get everything in the middle. So when you ask me why, I looked at the packed out value. If I was to start a company in the financial industry, boom, I'll have the license and I can refer and make the type of income that they have, which the income that they have is what they got something called guaranteed income, guaranteed residual income.
Mm-hmm.
That's big. That means in all businesses, sales go up and down. Sales go up and down. They got this thing. You reach a certain level of individual stuff you're teaching, you stay here. That made me feel so good 2 years ago when I had to have my surgery. To realize that I had just referred people to this company, taught people how to refer, because that's all we do is then teach people how to refer. We refer and then teach people how to refer. That's really all we do.
That's it. Yep.
That's really all we do. And we get paid. So I was the first one in the company to start making a 6-figure annual residual income. Okay. In the company stuff. And that was 2 years ago. And actually doing that. But then I had surgery. And I had surgery. But going into the surgery, I was so comfortable because I still had guaranteed income coming in.
Mm-hmm.
Guys, ain't nothing like, if I didn't work my tax office, it would stop. Now, I'm glad that I have my wife and my employees and stuff that were picking up and stuff and working, right? But if it was just me, and I'm talking to all you guys that's self-employed right now, but just you, and your money stopped, what happened? See, Bless, it used to be a day that people used to actually say, no, I always got this, I always got this. What happened last year when the pandemic? How many of our stylists, they said people always have hair, I will always have to cut it. What happened to them?
Couldn't be stylists. Couldn't do anything. Couldn't be barbers. Couldn't do anything. That's right.
Everybody wanted the stimulus.
Yep.
Everybody wanted stimulus. Stimulus was one time. I want. But if you would have had some type of residual income, boom. So that's why we're so passionate about it. And the whole thing about it, guys, is simple. And I want people to know it just is as simple as this. As simple as if you can just get all of the other garbage away from you and just think, if we can save this off of 3 deductions or whatever, but we can save you this. And if it covers a membership or a cost of a business, you in that business for what? Free then, it's covered. Mm-hmm. And then we can just refer people. They do all the work and we get paid. And all we do is teach people how to save more than what the business costs. First thing we do is teach people how to save more than business costs. Second thing we do is teach people how to refer people. That's it.
So I don't have to be a professional tax person or nothing like that.
No. That's it.
I don't have to know credit.
It.
No.
That is it. And the blessing part actually that I'm seeing is not just me in just doing that. I have several people on my team that's earning 6 figures or more in guaranteed income. And here's the cool part. Some of them qualify for that because the system was so easy while I was recovering from my surgery.
That's crazy.
It does me good to actually be sitting back and stuff and chilling and stuff, not doing something and getting emails on some of my team members qualifying for this, getting presented with their ring. I got my ring on today, getting presented with my, their ring. And I hadn't even seen them. They hadn't even been there, but they qualified. That shows us that people can make money, but systems create wealth.
Whew, say that one more time.
Yeah, people can make money, but systems create wealth. So the company had a system. The company had the right products that people are going to need. Those listen to me, if you ever wanted a home-based business of what we're doing, and you just think logically, and somebody has to put that to credit is huge right now. Here's why. Well, what happened last year in the economy? Don't you think it's a good time you're going to have any business to have something in finance? Just get the margins out of if you're going to have a business. People need financial help.
The worst part about it is they don't know it though.
Yeah. No, people can't travel all the time, not just because of coronavirus, because they can't afford it.
Right.
And if they afford it, they only afford one trip for a year. Let's just get real. Let's help people with cash flow. People need cash flow now more than anything. And that's what I liked about the company. That's why you said what business, refer, because it qualifies with the IRS. Everything that I'm saying is doing everything there. I mean, if we can dumbline this thing anymore, you know how many people we can help. It's like ridiculous.
Ridiculous. It's almost everybody. And that's why I partnered up with you along, several years ago. And then I chilled because, other business, I had to do other business. You got sick, right?
Right.
But now we back full of, but the reason why I did it was because of that. Because I knew the same thing that you knew. I realized the same thing that you realized, right? People are losing money.
Yeah.
And they have absolutely no idea that they're losing money. If it's a 70% of individuals versus the 30% that do, that means we have an incredible market.
Exactly.
We have an incredible market of people. That's almost everybody you know.
You gotta start thinking business.
That's right. That's an incredible market. You got your target market is almost every damn body.
So who would we target then? What type of people would we target? Who Mr. Hawkins, you out there in the field talking to me, what kind of things do you look at before you start? I know it's for everybody, but what's your target?
Yeah. Even if it's for everybody, if I'm going to put my time and energy into it and talking to somebody and doing something, what do we actually teach about is, the ones that can be, who can use this first?
That's right.
First. So I actually really like the individuals that are W-2s because they're the one that's hurting first, and some of them just don't realize it. I look for people that W-2s, they don't have a business right now, and especially if they got kids in between the age of 7 and 17. I want to talk to them today.
That's right.
I want to talk to them today. Why? Because every day that you do not have a business, you're losing this. And that's an average, guys, of $10 to $20 a day. Every day somebody do not have a business, guys. I want people to know, you listen to know, if you do not have a business, every day you're losing on average $10 to $20 a day. That's just like you leaving your house every day to go to your job and taking a $20 bill and throwing it out. How many days can you go before they start to hurt you?
That's right.
That's what you're doing.
Yeah. Let me ask you a question. So that sounds like $20 a day. If you threw that outside the garbage, that's 30 days. That is $600. Am I correct?
That's right.
So that means that's somebody's car payment.
That's right.
That's helping somebody's daycare, right?
That's right.
Stop playing, right? There's a bill that can be paid that can minimize the amount of stress that they're under right now, right? Stop playing, right? All because they started a home-based business and they partnered up with us. Is that what you're saying?
I'm actually saying that. And remember I said, studies have said that if people had an extra $500, $800 a month, we would have stopped foreclosure, bankruptcies, and repossessions. People that go into work part-time jobs, go to work and stuff and say, if I can just make almost an extra $500 a month. That's why they're doing it. People that have retired and then they go and try to find a part-time thing at either Chick-fil-A or Walmart or Reader or whatever it is. They just need an extra $500 a day so we can help them with
a month.
$600. I mean, a month, $600 in savings. Not even what the home-based business would generate. And if you saw the compensation plan, the one we choose, it's ridiculous.
Ridiculous.
Just this alone, man. Yeah.
The ironic part about it, you talking about $600 a month. The ironic part is people are doing that and then going to these check cashing places to get cash advances for $300 to $400 a month, and then having to pay that back the next month, then having to get another advance to pay that back the next month.
And they're paying higher fees and higher fees and higher fees. Let's get back to the tax part of it. How about the people that go to the tax professionals and get this same day loan stuff?
That's what I'm saying. Yeah.
You're paying so much extra money, as you're saying, for something that you overpaid.
You're paying to get your payment. You're paying to pay overpay.
Right.
You're paying to pay overpay.
I mean, you waited a whole year, so you can't wait a week.
Right.
Yeah.
We got to teach our kids. Got those that listen to us, because it's more than actually business. Those that listen to us, if you're listening to us, and if you're getting the big picture of changing the mindset of individuals, especially your kids, so they can change their kids, minds. See, this is bigger than Terrence Hawkins. It's bigger than us. I've always actually talk about impact.
That's right.
I always actually talk about I want to make an impact. That means when I'm gone, how many people have we helped and contributed to while I'm gone? So that, and then I told my son, I said one of the things I want to have to make sure that he actually does is have our name on our university's building. Okay, that stimulates how many people did you help and what you gave back, and you're gone. Right. Your name should be on a building. Your name should be on the street. You know what I'm saying? Some of that we can affect the people that's coming behind us. Even though I didn't know this when I was growing up, I knew when I was 15 years old how to do a tax return, but I didn't understand FICA all of a sudden. Actually, I definitely didn't understand credit because I got the UNC Charlotte and 2 months up the first doggone month I was up in here, right? I didn't understand actually credit. I didn't understand debt like I do now. Definitely didn't understand retirement actually stuff. Then I had to learn all those things. But I tell you what, time I started learning, do you know who the first one I was teaching? My son.
Yeah, that's right.
I was teaching my son. And now you know what my son, guys, is teaching me now. He's 21 years old now, just turned 21. He's teaching me some stuff now. He's teaching me options.
Right.
He's 21.
Right.
He's teaching me all the details. And I'm sitting here like, what?
Right.
Okay. Daddy, you and I do. I said, I was never a big trader like y'all because if I lost $1, I'm mad as a mug.
Right.
I just knew me. And stuff. But I knew how I was taxed. He was like, I said, I don't know how it is. I said, but I know how it's taxed, man, right? Like that. But the key is you passing stuff on so that your kids and their kids can be better than you.
So in other words, you're not working for your first name.
Money game, huh?
So in other words, you're not doing this for your first name. You're doing it for your last name.
Exactly. Y'all put up a video about that. Yeah, exactly.
Yep.
Exactly.
Yep.
I want everybody on this call, after this Zoom is over, if you're on my Facebook friends, go to my Facebook page and look at the pinned post. What he's talking about right here, your last name, Walmart, last name, Ford, last name, Abercrombie and Finch, last names. There's so many businesses out there with last names that you.
Hey man, you said that Hawkins, last name.
Hawkins, you think you're buying a product. You think you're buying a product. Yep.
It's a Trevor Retriever. Tell him, Miss Hawkins. Last name, our last name. Don't forget our last name. You calling all them other last names. Don't forget our last name.
Hawkins, last names. People think they're buying a product when they actually buying the last name. So we got to have somebody buy our last names. You got to set it up to where your children, and it's biblical, y'all. See, I go more on the biblical side. It's biblical. Almost every parable in the Bible talks about investing in money and finance. Then we got to leave an inheritance for our children's children. Can't do that.
I would break that down. And then now you said inheritance, right?
Yep.
That's investment. You said I'm no man. I think you actually said that, right?
Oh no man, we're the no man nothing. We're to be the lender and not the borrower.
Okay. And what else did you say? You said something else too, right? Already.
No, I think that was it. That was 3 things there.
No, like my reason for actually pointing that out, because we started this about what people focus on. And in the church, that's what we normally actually focus on, right? Those two actually main ones we focus on, which is pretty much debt, right?
Right.
Pretty much debt and investing, debt and investing, debt and investing, right? That's all we kind of focus on, debt and investing. You know what I mean? What I say is the number one expense? Taxes. But we don't focus on that. And we don't even say that in the church, even though Romans 13:6-7 in the NIV said, this is why we pay taxes. For the authorities are God's servants who give up their time for governing. So if you owe, then you pay. It's right there. But we don't say that. Now, here's the one that costs you the most money. We don't say it. And the key of the whole verse I always said is, it says, if you owe, then you pay. That's the same thing as if you don't owe, you should not pay.
Give to Caesar what Caesar.
Showed you. We just showed you how you do not have to owe as much. We just showed you that. Yeah,
the Bible also says that the poor will be among us always, but it never says that you got to be the poor one.
Exactly.
This is going to
share information. We are definitely. I know I am looking for more people that want to partner with you guys, with us, sharing information over and over again. Stuff. And I just love it, man. I love actually being here with you guys.
Well, Terrence, man, we really appreciate you. You broke some things down for the people, for us, right? That people needed to hear. People needed to understand and see where their money is actually going and why their paycheck never seems to be enough, right? It's not because they're making enough, they're just not keeping enough, right? And now we taught them and we showed them how to do it, right? So guys, whoever's interested, anybody that's on this line under the sound of our voice, whether you watch this through its entirety later or if you're watching it now, okay? If you are interested in learning how to increase your pay, to learning how to reduce your taxable amount of income, if you want to learn how to create an extra residual stream of income, see, because all of us, we have residual income. We have money that just comes all the time residually, whether we decide to stay in the bed or we decide to get up, right? So if you want that as well, guys, please get with Kirk Wheeler, myself, Terrence Hawkins. This is being
whoever invited you.
That's right. Whoever invited you, get with them so they can tell you the information and they can refer you to the same opportunity that we're a part of, guys. All right. I'm telling you, this is changing lives. We are truly making wealth real for real. But we're not asking you to go out and sell no lotions, potions, nothing strange from the bottom of the ocean to make money, right? We're teaching you tax strategies that make money automatically for you, that allow you to keep more of your own money already that you're already making. Stop playing.
Before we end this thing, Terrence, you got to touch on really quick. What kind of guarantees?
Yes. Tell them about the guarantee, Kirk.
Okay. Yeah, because that's another reason why we chose this company.
That's right. Yeah. That's right.
That's another reason why we chose this company, guys. Because here's the thing. I went throughout that company stuff teaching. Yes, we can save you more in taxes than the cost of the business. Save your taxes the cost. Save your tax cost. And we always have actually some that say, "Oh, well, I can do that, but when am I going to see the savings? When I'm going to have the savings? Yes, the savings can happen in tax season. It can happen this kind of this." The company even has a thing that, remember, we referring people and use their experts. The company said if the experts are working with you and you go through their plan of action and they're working with you, if you do not save or make more money than what the business costs, what we're talking about, they give you 30 days to do that, and they give you a full refund if you can't save or make more money than the business costs.
Stop playing.
You have zero fear of loss.
It's a no-brainer.
There's no way you can lose. The only way you can lose is to not start, is to not try.
That is absolutely correct.
Man, we're going to change something in your lives, man. I definitely appreciate y'all actually doing this. So everybody that's actually listened to it need to be contacting you guys, because we are going to change so many people's lives. Right. We don't want people to late, guys, because every day you're losing money. I'm coming up on this actually Saturday, well, not this Saturday, actually next Saturday, and I'll be doing the Real trade. If y'all think that this is good and I gave you some value, great. But we're going to go line by line on the second Saturday of the month, line by line, and what you're going to learn. You're going to be, those of you that have kids, we're going to be structuring you to put it in place. Here's what you need to do. 1, 2, 3, and stuff like that to go and do it. If you got, like a deductions for auto deductions, I'm going to be teaching you the difference between mild deductions and actual deductions. Yeah, the actuals and stuff like your gas receipts, like washing your car, like the maintenance, like the tires, like the depreciation if you first, the bonus depreciation up to 100% write-off. Everything is going to be actually going through it. You think you're going to go to a tax course and know this? It's going to be ridiculous. Okay. Mm-hmm. Now, I normally charge, I'm going to tell people, I normally charge $300 to $500 an hour in my office. And I never had anybody to actually want the money back. Okay. In doing it, because as y'all know, I like tax. I like to educate. I like to get people and save people money, but you're going to get that and more doing that, it's going to be about 2 or 3 hour session to make sure that we answer all questions, and all that is going to be a private call, private inviters on it. That's a part of our team on it. That's up and above what the company is going to already do.
That's right.
That's already above what the company is going to do. Okay. You're going to have me there as the enrolled agent. I got some other people that's part of our team that are, but those who want to CPAs, they are CPAs, a part of it. Okay. As well. And we're going to be educating and coaching like never before.
Listen, guys, that's incredible.
This is powerful.
It's powerful. All right. And I'm looking forward to meeting a lot of you guys that are watching this. Okay. Once again, get back with whoever invited you to this call. All right. And let's go ahead and get started like tomorrow. Right. Because guess what? As soon as you start your home-based business is as soon as you can take advantage of everything that we talked about immediately, guys, immediately. And we haven't even talked about the instant pay raise that you'll get at your job, guys, that you could potentially get at your job just by joining and owning a home-based business day one.
That's right.
Stop playing, right?
Close us out with opportunity, Bliss. Opportunity does what?
Opportunity comes to, listen, I say this all the time when I'm speaking to people, and I'm going to say it again. Thanks for reminding me, Kirk. Opportunity comes to everyone in life, but opportunity waits for no one. Opportunity keeps it moving. All right. So, that's right. Good night, guys. We enjoyed you. We will be having this again. I'll be inviting Terrence Hawkins back again if you guys would like to know more. Okay, we're going to do this again for those of you guys who missed it live and want to ask some live questions, right? Come on back the next time, and we will see you guys the next time. God bless and have a wonderful rest of your evening, guys.